Hey everyone, if you've been following the electric vehicle industry in the last 6 months or so, you will have known that there's been a price war heating up. You can argue that Tesla started this price war by cutting prices across all of its models across all geographies, but then rivals followed suit announcing price cuts of their own, including Ford. Now, you might already know that price cuts are not good news for investors. Why is that the case? Well, because when a company cuts their price, it lowers their gross profit margin and leaves less money on the bottom line. That is, of course, unless there is an equal or greater increase in revenue as a result of increasing unit sales due to lower prices. But that hasn't been the case in the industry. Lower prices have just led to lower gross profit margins industry wide. You can take a look at Tesla, you can take a look at other providers, all of which have experienced falling gross profit margins as a result of these price wars. Now, why did I say that this is great news for Tesla and Rivian stock investors? Well, because Ford sent a very clear signal to the industry in their latest quarterly conference call on July 7, making it known that they're ready to take the foot off the pedal in competitive pricing in these price wars. Now let me show you what I mean here. So here's Ford in their quarterly conference call saying that new customers have significant lifetime value. Lifetime value. Now, this is a dangerous term I've mentioned in many of my videos. If you're an investor and you hear companies start talking about lifetime value, that's when you start to get your warning signs out and stay cautious with the stock, because when companies start talking about lifetime value, the next sentence or two is likely to me them saying, you know what, we're willing to sell our products at losses at lower prices because in the long run we can make that money up from these customers because we'll sell them more things in the future years. Right? So that's the signal when they start talking about lifetime value. That's when they start telling investors, don't worry about our losses right now. Don't worry about that. What you should focus on is that when we acquire this customer, we're going to make so much money off them over the lifetime that it's okay for us to lose money on the initial sale. Now, I won't get into why, for all of the reasons why that's not a prudent investment strategy for investors or the company. But what I will say is the good news is that Ford is saying, you know what, we acknowledge that customers have significant lifetime value, but we're not going to bear an unlimited cost to acquire those customers and build our installed base. So we're not going to come out of pocket. We're not going to go out of our way. We're not going to absorb these big losses in order to attract these customers just because we think in the future we can maybe make up that money, right? Which I think is a smart move from Ford. Because you attract the customer today, there is no telling if you're going to keep that customer over the next 3 years, the next 10 years, the next 20 years, or 40 years, let alone enough time for you to make up the loss from that initial sale. Unless you're a company like Apple or Costco that has customer retention of 90% or higher, it's really difficult to make decisions based on the fact that you're going to re regain that initial loss from that upfront sale that we are willing to take the loss to acquire that customer. So now we are targeting to reach 600,000 annual production units by next year, which is a decrease, right? And we maintain flexibility on where we reach when we reach the 2 million total EV capacity, because we are balancing growth with profitability and returns, right? So this sends a clear message to industry participants, and you better believe that Tesla, Rivian, GM, and others are paying attention to what Ford is saying in their conference call. You better believe it. This is competition. Billions of dollars are on the line here. So they're paying attention to these signals. And what Ford is saying is, you know what? We're not going to go out of our way to absorb losses for market share. So we're sending a signal that we're willing to take a step back. And so now Ford is going to wait after sending this signal, in my opinion. They're going to wait and see how the rivals respond. They're going to wait and see. Is Tesla, GM, Rivian, and others, are they going to respond to this statement by a equally friendly step, an equally less competitive step? It doesn't have to be in the same way that Ford did this competition decrease, right? It can be in a different way. It could be from Tesla saying, you know what, we're also going to decrease supply. Or you know what, we're not going to cut costs anymore. We're done with the price cutting. Or you know what, we're increasing the price. It could be GM saying, you know what, we're going to reduce advertising by 10%. So it can be a myriad ways where companies, rivals can respond in an equally friendly manner to tell Ford, you know what, we got your message. We like what you're saying, and we're going to respond in kind, right? Just in the same way that if you make a competitive step to try and take market share, your competitors will respond in that same in equally competitive fashion, maybe even more so, right? So if you cut your price on your models to gain market share, your rivals are going to do the same thing because they don't want to let you take market share. They're going to cut their prices too. They're going to respond to your actions. And so it works both ways. If you take a friendly step, if you take a less competitive step, more often, your rivals will also follow suit. They'll send a signal back to you saying, we get your message, we like what you're saying, we want to do this. Or they might say, no, you know what, we're going all out, we want to crush you, we want to compete fiercely. And that would be not a good sign for anyone in the industry, because the whole fundamental thesis, the whole fundamental thing is, if you're in a fierce competition industry wide, it's going to bring down profit margins for everybody, and that's going to make it less attractive for investors. And the opposite is true. If you're getting less competition, that's increasing profit margins, increasing profitability, which makes it more attractive for investors to enter the industry. But overall, this is good news. This is a step in the right direction following all the fierce price cutting and price wars. Hopefully for investors, rivals will follow suit and say, okay, enough is enough. Our profit margins have fallen enough. Let's start to ease up on the competition and focus more on profitability. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.